Hi there, I'm Russ Horn and welcome to my page today. What I'd like to do is give you a completely free trading system called the Forex Profit Nexus. This is a system that I've built from the ground up. It's got a couple of really cool custom indicators that I think you're going to like a lot. Now, you will find download links below this video that will get you the auto installer and the trading manual. Now, if you continue to watch this video, I will show you how to run that auto installer and get that system onto your MT4 charts. After that, I will show you how to actually trade the Forex Profit Nexus system. Again, that's in this video. So do that. Download the system, get it up on your charts, watch the video, try it out, and then after you've done that, come back and leave a comment. I really do want to hear what you think about the Forex Profit Nexus system. And if you leave a comment, you could win some pretty cool prizes. So without any further ado, let's get right into the Forex Profit Nexus system. Hey there, you have downloaded the Forex Profit Nexus auto installer, and that's what I've got here. This is my zip folder for the Nexus system. Now I'm going to show you how to install this onto your charts. And then once we do that, I'm just going to cover the rules really quick for you. Now this video isn't going to be a really long one. I want you to get onto this as soon as possible. I know you're antsy to get going. So let's start with this. We're going to run the auto installer, get everything set up, and then I'll cover the rules. So the first thing is to open up the auto installer. With this, you're going to find an exe file. This is the auto installer itself. It's going to install a template into the templates folder and a series of indicators into the indicators folder. Now these indicators are there. The template is there, and you don't need to worry about either of those. The auto installer will install that for you. Now, if you don't want to use the auto installer, or for whatever reason your computer won't let you do it because it is an exe file, you can install those manually. Double click the exe, choose run, and it is going to run the installer. And with that, I get the FMM Evolution Nexus Install Wizard. The installation wizard will take care of this for me. Now, I don't need the zip file open anymore, so I will just get rid of that. And then simply follow the rules, or follow the instructions as they appear. So click next. Now, I get this error message because I do have an MT4 platform open. If you don't have an MT4 platform open, you will not get this message. So I'm going to close my platform. And now hit OK. I accept. Click next. I want to make sure that I'm installing this on a certain platform. So I will uncheck every platform that I do not want it installed on and keep the platforms checked that I do want it installed on. So now I've got everything checked. By default, it will check everything for you. I just want it on my Think Forex, on my Think Markets platform. So now that that's the case, I'll click next, and next one more time. It's installing, click next. And this by default will choose run this MetaTrader application. Now I don't want this simply because it runs the wrong version. So I'm going to uncheck that and then open up the appropriate MetaTrader application. For you though, you might want to keep this checked. It will launch the platform that you've installed it on. So now I'm going to click finish. And now I will open the MetaTrader platform that I do want. And from here, under my templates icon, I'll click templates and then click on FMM Evo Nexus. And this is the Profit Nexus trading system. It's very simple. It's really probably as simple as it looks. It looks pretty straightforward. Now, I want to cover the basics as far as the system goes. There are conservative rules and there are more aggressive rules. And this really is very straightforward. Like I said before, I don't want to take too much of your time with this because I know you're itching to get to this, but I will cover sort of the fundamentals with the Profit Nexus system. The first thing that I want you to notice is right in the middle here, we've got this thing called the Nexus Oscillator. The Nexus Oscillator will help us determine a market bias. Now, as far as I'm concerned, a market bias is very important. I want to be sure that I'm trading in the direction that the market has the biggest, strongest likelihood to travel. The market, when it does start moving, will take on momentum. It will start to move in one direction more than it moves in another direction. And the Nexus Oscillator will give us that market direction. So with this one, when the Nexus Oscillator is blue, the bias is up. We're looking to only buy. When the Nexus Oscillator is orange, the bias is down, and we're looking only to sell. Now, when the Nexus Oscillator changes from blue to orange or from orange to blue, this is not a signal to take a trade. We're not going to use this as a signal. We're using this simply as the direction to trade. So when we are looking at an orange Nexus Oscillator, I only want to be looking to take short trades. When we're looking at a blue Nexus Oscillator, I want to be only taking long trades. We can see areas in here like this. This is a long stretch of blue oscillator where the bias is up. Every move up is considerably bigger than the moves down. Right? So we want to be taking trades in the direction where the market has the strongest oomph, the strongest push or momentum to move in that direction. And this Nexus Oscillator does that pretty well. This is how we filter our trades. The next thing that we're going to take a look at is on the chart. We have in the middle the orange and blue bars that run right through the price. This is called the Nexus Wave. This is the wave indicator, and it gives us a quicker bias basically, and we can take trades based on those signals. When the Nexus Wave turns from orange to blue, and we have a blue Nexus Oscillator, we can take long trade. When we have an orange Nexus Oscillator, we can take a short trade. When we have the wave turn from blue to orange. So we're looking for that. And these arrows that are on the chart, what they do is they show us where the Nexus Oscillator changes from one color to the next. Now, at times, the Nexus Oscillator can get very narrow, can get quite small. So it is sometimes hard to see, especially since it is running through the price. It can kind of get lost in the middle of the price action itself and the candles. So when it changes direction, we will have the arrows point up when they turn blue and then point down orange when they turn orange. Now, using the wave and the arrows together, they will give us what we consider conservative signals. The market really does have to prove itself in order to get into a trade this way. So there has to be some market movement. We need a little push. We need to see that the market does really want to start moving in that direction for us to take a trade based on the wave itself. Now, what we're looking at the bottom is a Nexus Cci Histogram. Now, this is going to be a faster moving indicator. And with this, we can choose to take a little bit more aggressive trades. The market doesn't have to prove itself in quite the same way like it does with the wave element. With the CCI, we can take a little bit more aggressive trades in maybe one or two candles earlier than what the wave would do. So we can be looking to take signals when the oscillator is blue and then the CCI histogram turns from orange to blue. That could be a signal itself. So if I just mark this off, we'll cover this in a little bit more detail, but you can see how we have the arrow is on this one candle here, but the CCI histogram has turned blue a candle previous to it. So we do have this element of a little bit more aggressive entries. Now, with a more aggressive entry, we're going to get maybe a little bit more of a fake out where the market looks to be going in that direction, but it doesn't quite follow through. I mean, that's what happens when you do choose to take a little bit more of an aggressive approach. We want to speed up the process. We want to take the signals maybe before they're really super clear as far as the indicators go. But a lot of the times they do work out quite nice. So with the Cci histogram, it follows the same rules as it does with the wave. When we have a blue Nexus Oscillator, we're looking for the histogram to turn from orange to blue. And then on the close of the candle that prints the first blue bar, then we could be looking to take a long trade. Now, that's basically how this system works. So let's get into a couple of trades. Well, I'll show you a long trade and I'll show you a short trade. And we'll do that using both the wave and the CCI. So we've got a nice example in this area right here. I'm going to just widen this bit of the chart so we can see this a little bit better. Now, the way we're going to do this, and it's very, very straightforward. We're going to get a signal. We're going to see where our stop loss goes. We're going to place a target, and we'll let the trade run from there. We're going for 1-to-1. Now, of course, you can do anything you want. You can go 1.5-to-1. You can go 2-to-1. But generally speaking, I like to go for the 1-to-1. It is a target that is much more easily hit, and we do win more than we lose when it comes to this system. So going for 1-to-1 is pretty good. I think we do all right with that. So this is the area I'm looking at, right in the middle of the chart here. So we've got this area where the oscillator is blue, and this will apply to any of these setups that we have here. But we have an oscillator that is blue. So what we're doing at this point is looking only for long trades. We're not looking for short trades. We're only looking for long trades. The bias is up. The momentum is up. And we want to be trading in that direction of the momentum. We want to be trading up. So we've got the oscillator is blue. So what we're waiting for is for the wave. Now we're going to cover the wave signals. The wave to turn orange and then back to blue. And when it goes from orange back to blue, then we have a signal to go long. Now in this area, right in the center of the screen, we've got the blue oscillator, and then the Nexus wave turns orange. That's perfect. That's what we'd consider a setup. When we have the wave and the oscillator, two different colors. So what we're looking for now is the wave to turn to the same color as the oscillator, provided that the oscillator remains the same color. We want it to stay blue throughout this whole process. The Nexus wave is orange. The oscillator is blue. We are waiting for a candle to close and the Nexus wave on that close to be blue. So what happens is on this one candle here, this white candle, and I'll mark this off, this white candle, when it closes, the Nexus wave prints a little blue bar. Now we can tell that's turned blue because the arrow will pop up underneath it. Once that candle closes and that Nexus wave prints blue, we're going to get an arrow, and that arrow is pointing in the same direction as the Nexus Oscillator, which means we are good to go. We can look to take a trade. And what I will do is enter a long position at the close of that candle, which would be the open of the next candle. My stop loss would go underneath the most recent swing low, which is the safest place to put your stop. And then from there, my take profit would be 1-to-1. So I'm looking for a 1-to-1 trade, and that 1-to-1 is, based on the size of your stop loss. So in this instance, if my stop loss is 10 pips, my take profit also would be 10 pips. Now again, you can change this up a little bit. You can go for 2-to-1, 1.5-to-1, whatever you're really comfortable with. But to start with, I like to go with the 1-to-1. It seems to give me really the best opportunities and the highest probabilities of closing out a trade. And that to me is a pretty big deal. Now, I don't want to be taking trades that give me less than 1-to-1. So if I'm risking 10 pips. I don't want to be aiming for 5. On paper, after so many trades, you really have to win considerably more than you lose just to break even. And I like to put as many opportunities or odds in my favor as possible, and at least getting 1-to-1 on the trade with a trading system that wins 65-70% of the time. We're going to be making some money with this. Now we have other opportunities here. The wave turned blue here as well. So this one's considerably smaller trade. Stop loss, that was the entry. Stop loss goes underneath. 1-to-1. Looks like we may have just missed it. That's okay. I am not too upset with that. Another opportunity here. Stop loss under the swing low. This one, no problem in hitting that one. And we have just opportunity after opportunity. There's going to be the time of day you want to consider. This is a 5-minute chart. Now we could look at any different time frame. 5-minute charts, you want to consider the time of day you're trading. The last half of New York throughout Asia, that could be pretty slow. The London session is ideal. So let's click this off. We're going to take a quick look at a different time frame and just see how this goes. We're going to play out a different time frame. So we have lots of opportunities. You're not going to be hard up for an opportunity to take a trade here. So what we've got are some different opportunities. So we have a oscillator that is down. We've got an orange oscillator telling us at this point, all we want to do is look for short trades. So what happens is we need the setup first. So we've got the oscillator is orange and the wave is blue. The fact that they're different from each other means that hopefully they'll come back and be the same as each other, which means that we've got an orange oscillator and a blue wave, meaning we've got the setup. So then we're looking for the signal to go short. This orange arrow pops up when this candle closes, printing the first orange wave bar. So entry at the close of that candle, which would be the open of the next. Stop goes above the most recent swing high, which could be this swing high here. Oh, there we go. Or to be a little bit safer, you could go above the high, and then we'll target 1-to-1. So the market moves, gets there almost in this big one candle, pops back up, but then hits that fairly easily. So we have opportunities all over the place. And this is how this is going to work. We're looking for an opportunity in the direction of the Nexus Oscillator. And finally, those were considered to be aggressive. Sorry. Those were considered to be conservative. We're going to take a look at what's aggressive by using the CCI now. So for a long example, and a CCI would give us a couple of opportunities that may not present themselves otherwise. Now, one opportunity is just the fact that we're going to get signals a little bit quicker. Now, let's take a look at a quicker signal just so that we can see how this goes. So let's take a look at that same example in here. The wave is blue, but we're not really looking at the wave at this point. For the CCI type trades, we want to take a look at the CCI, not so much the wave. The wave indicator is for a conservative wave trade. The CCI indicator is for an aggressive CCI trade. But what we want is for the CCI and the oscillator to be going in different directions. So we want to have an orange oscillator and a blue CCI. What we're looking for now is for the CCI to turn orange. And that would be in the same direction as the oscillator. And when that happens, we have a signal to go short. So what we've got is the first signal to go short right here. Now, this is 2 candles earlier than the wave. Most traders are going to opt for the CCI version of this trade setup. And fair enough. fair enough. It's going to get us in early enough that our stop loss is going to be considerably smaller, which means our take profit is going to be considerably smaller, which means the market just doesn't have to move quite as far. And we're going to get more trades. We're going to have more frequent trades because of this. So here is the first signal to go short. Now, if we miss that, there is a second signal that we could take right here, where the CCI turns back to blue and then back to orange again. So once we have this white candle printing and the CCI turns blue, then we have a setup once again to be looking to take another short trade. So if we miss that first one, that second one is not too far behind. So we get the signal, enter at the close of the candle, stop goes above the most recent swing high. It could be this high or this high. And then finally, we go for a 1-to-1. Again, the 1-to-1 using the CCI means it's a much more aggressive, smaller, compact market movement. So we're going to get more opportunities to trade, and the market just doesn't have to move quite as far. Now, this is an early entry version. I would like to show you one where the wave doesn't turn to blue. We have a bit of a pullback. This is a good opportunity right here. So what I'm going to do, I want to keep that nice and big. So we've got the CCI, sorry, the oscillator. The oscillator turns orange right here. So anything after that, we're looking for short trades. What happens though is the wave, it narrows, but it never turns blue. So we still have that smaller trend is still intact. But we do get an instance down here where the CCI turns blue. And even though the wave hasn't changed direction, remember, we're not really looking at the wave for the CCI trades. So even though this wave has remained orange, because oftentimes it will turn blue. It will change color with the CCI a little bit later, but it does change color. There's an instance where it doesn't happen. The wave doesn't change color. It stays orange. And then the CCI goes from blue back to orange again. So we do have an opportunity there to go short. Same rules. Enter, stop loss, and profit target. Nice little trade. This one was really quick. So we have these opportunities using, again, the CCI. It's a much more aggressive way. But the trades themselves are really nice. They are timely and they're usually right on the money. We're going to do really well with these. Now let's take a look at long opportunities. Let's go back to that. So we have an opportunity to go long using the CCI here. This is timed with the wave, so that's okay. We've got an opportunity to go long on this tiny little candle. What an opportunity that would be, eh? Getting in on this little tiny candle and then exploiting that big move up. Now this happens before the move. What a great trade that would have been. Another opportunity to go long on this bigger candle. And this is really how it is. We have the oscillator as being blue. So we're just looking for long trades. So what's going to happen? Again, let me zoom back in so we can see this a little better. The oscillator is blue, so we're looking for the CCI to turn orange. Once that CCI turns orange, we have a conflict between the two, which is the setup. And then we're looking for the CCI to turn back to blue, which would be the signal. Signals on the close of this candle, stop loss underneath the most recent swing low, and a 1-to-1 profit target. So this candle here would have taken us out of the trade. Now we have other instances of that all along the way here. When a candle is abnormally large, and for me, if it's 2.5 times bigger than its surrounding candles, I tend to not take that. The reason being, there's so much market movement and we can see what the average candle's length is. If I get a candle that is just huge, there's a good chance that it's used up most of the market momentum, market movement. Now, because you have a big candle, you have a big stop loss. Because you have a big stop loss, you have a big profit target. So when you have a really large candle, you're expecting the market to move 3, 4, 5 times more than it normally does just to get your 1-to-1, if that makes sense. Or the average candle height in this is 73-ish pips. This one candle is over 230. So we're looking at 3 times the market movement in one candle. If your average candle is 70 some odd pips, we're looking for a market movement from stop to take profit to be about 150. And this one candle itself is 230. It is 100 pips more than what the average huge tradable move is. Now, how fair is that to expect that not only that one candle is that much bigger, that we have to expect that much more out of the take profit? Now, this does go that way. It does move that, but this is a trade that I would not have taken simply because of that hugeness of the entry candle. Again, my rule of thumb is 2.5 pips. Not 2.5 pips, but 2.5 times. If the candle is 2.5 times bigger than its surrounding candles, then I'm not going to take it. Just going to leave that alone. So that is essentially that. We have conservative trades using the Nexus Wave with the arrows included. We want to make sure that we're trading in the direction of the Nexus Oscillator. We have more aggressive trades using the Cci Histogram. Now, again, most traders are going to opt for the histogram version of this because you are going to get more trades. You're going to have more signals, and the stop losses are going to usually be a little bit tighter because we're going to get in 1 or 2 candles earlier. And because of that, the profit targets are going to be a little bit smaller, which is awesome because we're risking, whatever it is, we're targeting what we're risking. So if we can make 10 pips 2% of our account instead of 15 or 20 pips as 2% of our account, we're way more likely to get a 10 pip profit target than a 20 pip profit target. So most traders are going to opt for the CCI version of this signal. Try this out. See what you think. It is really straightforward. There's not a lot that you have to consider. We want the bias to be in a certain direction, and then we want to trade in the direction of that bias. Now, I know some traders are going to ask about, well, how do we know when the market's going to change? Really, we don't. And we want to get that out of our heads. We don't know that the market is going to make a big move in the opposite direction. Like this one here, for example, we have this big move. It starts when the Nexus Oscillator is blue, and we don't know that it's going to move this far. We do know that the tendency is to move in the direction of the bias. That is the market tendency. And of course, when the bias changes, the market is going to reflect that before anything else. So the market changes direction, and the oscillator does have to kind of catch up after the fact. It does take that into account, but what we're trying to do is filter out these little potentially losing trades in the wrong direction, and it does it pretty well. So we don't know exactly when the market is going to make a big change of direction, and I'm not concerned with that. That is not something that keeps me up at night. I want to make sure that I'm trading in the direction of the momentum. Now, the Nexus Oscillator does a really nice job of that. The wave is a really nice way to trade in the direction of the overall trend. The CCI, this also is a quicker version of getting into the trending direction trades. Again, try it. See what you think. I'd love to hear what you think about it. And I hope that you can make some money with this. This is the real deal. This is a workable, profitable trading system. And I hope that you can make something with this. Thank you for watching. And I really do want to hear what you think.